So
Not
very
bad.
interesting.
That's very positive.
I know, I know. So, but no, very excited, to have you on board, Nilesh bhai. And, I'm really looking forward to these 20, 30 minutes of Gyan. I haven't caught up with you for a while. So,
Yes. Yes.
I'm really going to personally benefit in which direction this economy is going and what do you think is going to happen. A little bit about the real estate sector as well, we'll touch upon.
Sure.
I, I'm just going to check whether we begin and then I, we start. Well, good afternoon to all the viewers and to our special guest, Mr. Nilesh Shah. I popularly known as Nilesh Bhai. Very apt in the Indian economy and one of the people that I look up to in terms of what's really happening with the economy. I was Nilesh Bhai looking at your introduction, and I said, "Is if we've got 30 minutes." Then this introduction is going to go on for 30 minutes of Nilesh Bhai. So I'm only going to say two or three things. I didn't know you were a gold medalist in when you did your chartered accountancy. I've managed to just scrape through being a chartered accountant, so I have a huge amount of respect for someone who has been a gold medalist in during his chartered accountancy. Also, as a designated AMFI chairman, and currently with the Kotak Asset Management Company as the managing director. Lots of diverse experience. I'm not going to go through it, but it is in fixed income, in equity. Nilesh Bhai has also got understanding of the real estate, which is a topic that we are going to discuss. But two very apt things, Nilesh Bhai, that I do want to say. One is your quote, and that you believe, which says that quality does not come cheap, and value without quality has no value. I was like, beautiful. It really summarizes your personality, Nilesh Bhai. And the second one is that you have been promoting women's education and believe that if you educate a woman, you actually educate a generation. I think many of us, believe in that, Nilesh Bhai. So we've got about 20, 25 minutes with you, Nilesh Bhai. I'm going to straight dig into some of the questions that I have. And I'm starting to see that there are a number of questions that are starting to pop up on the screen for you. Nilesh Bhai, the first one that I have is, you mentioned it previously that if you remain true to a sector for long, although there may be many failures in that sector, but if you remain true to a sector for long, you're likely to see a success. Uh, in this pandemic and post this pandemic, which are some of the sectors, Nilesh Bhai, that you would say are going to see success come through?
So essentially, Anuj, by in a sector, you can get an HDFC bank or you can get a Yes Bank depending upon entrepreneur. So first criteria is obviously management, and management. If you are backing a good manager, he will eventually make money for you. Second, in this post-pandemic era, three characteristics will distinguish winner from loser. One, lesser leverage. In the downturn, many companies will shut down simply because of leverage. Nothing can exemplify the pain of leverage than the real estate sector. Many good builders are going belly up because they were leveraged beyond their capabilities. Second will be operating cost. Clearly, companies which have been able to lower their operating cost and lower their break-even point will survive the downturn. I'll give you an example. There are two companies in the same sector. One renegotiated rent on all showrooms, cut salaries of management and staff across the board, dropped advertising campaign halfway to save money. Effectively, they have gone to lower their operating cost by almost 20 to 30%.
Wow.
Compared to that, other company has also done similar things in the same sector but with far less efficiency. They have cut cost by 10 to 15%. Now, this gap of 15-20% in cost will ensure that the first company survives longer than the second company. So, cut cost to the bone, because if you survive the downturn, then only you can participate in the upturn. The third thing, apart from leverage and operating cost, is leadership. You have to be leader in your sector. And leadership is not necessarily in terms of size, it is also in terms of innovation. Markets will pay disproportionate premium to innovative companies. There are companies which are valued at $1 billion without registering one naya paisa of profit. And there are companies which have more cash than their market cap on balance sheet because they are in so-called old economy business. Maybe this trend of market will change, or maybe innovative companies will continue to command higher and higher premium. So invest in those companies which demonstrate these three characteristics: lesser leverage, lower operating cost, and leadership through innovation. Now, obviously, these characteristics, when combined with a sectoral which is positively benefiting from this pandemic, you have a winner on hand. While pharma, IT, FMCG are apparent sectors benefiting, there are two sectors which can benefit significantly from this pandemic. One is chemical sector, where India's export share is going up. Other is contract manufacturing, where Indian companies which were supplying to global brands in India are now looking to supply overseas. These two sectors are almost similar to IT sector, which took the opportunity of Y2K to create billion-dollar opportunities. These two sectors can convert COVID-19 into billion-dollar opportunities with right management.
Beautiful, Nilesh bhai. I've taken a lot of key takeaways in that 5 minutes that you said is leverage, cost, leadership. I think are the three important contributors. And then on the other hand, the sectors that you said is we're well aware of the pharma, we're well aware of the IT, FMCG, but two new sectors that you have highlighted, one is chemical and the other one is contract manufacturing, which you're saying is, are several billion-dollar sectors and can really catapult the economy out of this pandemic. Uh, Nilesh, I do want to bring a little bit of focus onto the real estate, and given that you are the managing director of Kotak Asset Management, I see there is a lot of focus on several other sectors, but you are very light on real estate stocks. Um, is there something that needs to be done to excite Mr. Nilesh Shah to start to look at real estate more favorably?
So undoubtedly, Anuj bhai, one, there are many good quality listed real estate companies, but by and large, this sector is mired in governance issues. Whether we accept it or not, but the fact remains that in many parts of India, black or cash component remains a large part of real estate transactions. Whether we like it or not, but the fact remains that speed money remains a large part of real estate industry. Third, real estate industry, despite many stalwarts in terms of governance, have also seen as many crooks who overall bring down the perception about the industry. I have met developers who have honored their commitment to the hilt despite many challenges. And I have seen developers who have taken consumers for a ride despite availability of everything at their disposal. Now put all these things together, as an investor, as an equity investor in real estate industry, I find there is problem of transparency, there is problem of governance, and there is problem related to perception. By staying underinvested in real estate, by and large, we haven't lost. Uh, there was a time when real estate company was part of benchmark indices. Today, they are way out because of the poor performance. I think real estate industry has to figure out how to professionalize and corporatize that industry from a transparency point of view, from a governance point of view, and most importantly, from retaining consumer confidence and investor confidence point of view.
And Nilesh, by the two commercial office REITs that have been done, and both have been very good success, whether it was the Embassy Blackstone REIT or the Reheja REIT, which was done in the lockdown. And in the Reheja REIT, Nilesh, bhai, we saw a lot of retail investors that have come in. Do you think that is going to start to reimpose the confidence in real estate investment by certainly by the retail customers?
Undoubtedly, today, if you see, bulk of the retail investors' portfolio is exposed to real estate. It is way above equities, way above fixed income. So undoubtedly, people love real estate. Now you have to convert that love for real estate into love for real estate investment or real estate developer. REIT is an excellent transaction, and the good part is that the entry of REIT has been led by marquee names. If you see on the other hand in InvIT, the entry was a disastrous experience for investors, rightfully, wrongfully, whatever may be the reason, but the net outcome was a disastrous experience for for InvIT investors. And the subsequent issuers had to carry that burden to change the perception. Fortunately, in REIT, both these names are blue chip. They have given pleasant experience to investors, and now they have paved the way for other marquee names to come and raise resources from the retail as well as institutional investors. What these two entities have done, if other entities start following up in the equity market, I'm sure they will be able to raise equity capital at a much cheaper price.
Yeah.
Today, when we
And
see
Nilesh,
real estate transactions, the borrowing rates are upwards of 20% and 30%. Why should an industry borrow at that high cost? It just shows your risk premium. If you improve governance, if you improve transparency, your risk premium will come down and you'll start borrowing at 8.5%. In the car industry, Maruti will borrow probably at 6-7%, and vehicle financiers, retail consumers borrowing car loans will borrow at 11, 12, 14%. In real estate industry, consumers borrow housing loan at 7.5%, and the
right.
builder borrows at 30%. That needs to be reversed.
A huge dichotomy between the home loan rates and the developer construction funding rates. Nilesh bhai, if you were to look at it, the risk premium that is being added on the interest rate for the developer is way high. And the way that you have articulated and I have understood is, Nilesh bhai, you're saying is that this can come down. The risk premium can come down if there's better governance, if there's transparency, and if the developer shows financial discipline. And then, the last point that you said is that there are several instances where they may have had capability to deliver on the promise, but they did not. And on the other hand, many who did not have the capability yet went out of the way and gave a positive response to the customers. But brilliant the way that you have articulated on the investor, and I 100% agree with you, Nilesh bhai, that we are fortunate that the REIT entry has been by very credible names. I saw in 2007 and 8, some of the real estate IPOs at that time that came in were not as credible. As a result of which, Nilesh bhai, it stopped. And since 2007, we've really not had a real estate IPO. We are at 2020. We are in 13 years, and we've not had visibility of any new IPO in real estate. So it's a super takeaway to say is that REIT, the entry has been fantastic. Hopefully, we will continue with very marquee names coming into this product, and the confidence of just not the institutional overseas and Indian investor, but also the retail investor will continue to go up. A couple of more things before we move into a little generic stuff. Nilesh, you've been a big supporter of long-term investment, and investment which has a sort of relatively long-term horizon. Real estate is long-term, and really, if you were to look at the hard asset, it is a fairly long-term investment. In your view, is it better to invest for an investor into a hard asset, hard real estate asset, or listed stocks?
The old adage of don't put all your eggs in one basket applies in wealth also. There is no either or between stocks and hard real estate. It is both which are necessary in customers' portfolio. And in real estate transaction, if I can demonstrate it through Bombay example on commercial estate side, if you bought commercial property in Bellard Estate, which was the business hub in 60s, 70s, today it's not giving you any great return. If you bought in the 80s and 90s Fort Flora Fountain area, which was commercial hub, again it didn't deliver great return. If you went to 90, 2000 in Nariman Point area, again it didn't deliver great return. And probably if you bought real estate in BKC in 2017-18, today you are down 20-30% notionally, if not really. On the other hand, instead of buying fort in 80s and 90s, if you had bought if you had bought Bandra Kurla complex in 80s and 90s, your returns would have been fantastic. So real estate actually gives you to play for a long term by taking a call where the city will be shifting. And this is best demonstrated in Ahmedabad real estate, where city kept on shifting from Relief Road inside the walled city to Ashram Road outside the walled city to CG Road to Satellite Road to SP Road and now one more road outside. This kind of 10, 20, 30, 40-year horizon, if you can capture which way city is shifting, can deliver magnificent return on your portfolio in real estate.
Absolutely, I agree with that. But then you really need to have a little long-term view and be a little futuristic to be able to see which way the city is really expanding, and then which way the infrastructure in the city is really expanding, and you'll be able to then be amongst the first ones to go out and invest there. My two questions more on real estate before I want to dig a little bit into your theory of investing generally, not only in real estate, but just on the real estate, Nilesh bhai. What does really the real estate sector, need to do to really attract foreign equities in residential sector? We're getting institutional investors on the commercial completed sector. We've had several of the private equity guys who've done billions of dollars of investment in the commercial sector in India, but not as much interest on the residential sector. So what needs to be done in the residential sector to attract some of the equity? And as you rightly said, leverage is probably not the solution.
So, Anuj bhai, let me try to answer this on a top-down as well as bottom-up basis. On a top-down basis, the day real estate industry starts treating its consumer as king and not as a football, perceptions will change. Every single investor, whether it's a foreign or local investor, has invariably got a bad experience in buying real estate. Whether it's buying beforehand or under construction or getting service later on, there is a personal bad experience which kind of inhibits us. Now, when we invest in pharma company, when we invest in auto company, when we invest in FMCG company, we know consumer is king. In the real estate industry, that adage is not working. So philosophically, top down, you need to change perception about your industry by saying that we are giving priority to consumer, everything else will fall after that. On a bottom up basis, any investor is looking for return and surety of that return. In residential space, I think returns are visible. Uh, as long as real estate investors, real estate issuers don't become greedy, where when he buys in acres at a price and then decides to sell it to us in square foot at a multiple times higher price, that equation is not going to work. There should be some connection between buying in acres and selling in square foot. But more importantly, in the surety of return, again, three things will come into play: your transparency, your governance, and most importantly, your consumer is the king adage. Let me give you an example of what Titan has done to gold jewelry. If you remember, earlier days, gold jewelry business was very fragmented.
Correct.
People were buying gold jewelry from family jewelers, but there was limited respect for those gold jewelers.
Absolutely.
People were always doubting about the quality. When Titan came, it had Tata brand name, yet it brought a carat meter with which you can verify purity of the jewelry. Industry took time to accept hallmarking, but today every jeweler has accepted hallmarking to assure quality. Now, Titan today has become the largest jewelry company, outperforming virtually everyone because it believes consumer is king. It is willing to certify quality which consumers didn't want from Tata name, and yet it said, no, I'm going to deliver. More importantly, it has worked or set a benchmark for others to copy, and now every jeweler is on the hallmarking. The entire jewelry industry's perception has changed courtesy Titan, and you have seen now equity flows going into various jewelers. Kalyan Jewelers had Warburg Pincus as a partner. There are many other jewelry stores which have got private equity funding. So what Titan has done to the jewelry industry, jewelry distribution, you need someone to do that in the real estate industry.
Absolutely, absolutely, and that brings in then a huge amount of credibility. And then Nilesh bhai, what a great example of Titan. They came and they redefined the market, and now the full market has moved towards that direction. And you're absolutely right. There will emerge, players, leaders in residential real estate who will be able to hopefully redefine the market as we start to come out of this pandemic. And I think that the full industry will then start to follow if that player, because the industry will need to move if they have to then remain relevant. Nilesh bhai,
Absolutely.
yeah, I'm going to change gears. I'm going to ask you three sort of a little more generic questions. The first one is, Nilesh bhai, I was looking at your profile. Most of your family members, most of your cousins, have set up very successful businesses of their own. And you've been a little bit of a black sheep in the family that you went into the corporate life. So what made you go towards corporate life and not like your extended family and like your cousins who've been very successful in business set up a business?
So I will put it to my limited risk appetite. I was very conservative by nature. Uh, I wanted to appear in exam only when I was sure I will get number one rank. So there was conservatism all throughout. And fortunately for me, wherever I have taken a job, I became a professional entrepreneur. I got liberty to do whatever I wanted to do as if I'm running that business. ICICI had a great culture of encouraging entrepreneurship. Uh, they simply put you into swimming pool and you have to figure out how to swim. And of course, they were providing support so that you can swim properly. But they weren't hesitant in throwing you into the swimming pool. And that probably experience pushed me to become a professional entrepreneur rather than pure entrepreneur. Incidentally, one of my cousin brother is a real estate developer in Baroda, and he is going through the ups and downs of the real estate sector, but I believe he is a fairly successful one.
No, this is fantastic. You get the best of both the worlds, Nilesh bhai. You get the best of the corporate and best of being an entrepreneur. And I love the way that you put it up, that professional entrepreneur. And it gives you the ability to really push in your thoughts, your ideas, your innovations in a setup which at the same time has guards that you are able to swim properly in that. Nisbah, what will be your advice to some of the youngsters, who are watching this program and who want to start to invest and who are contemplating now that they're starting to make some money in their working careers. What would your advice be, given where the stock markets are and given the nature of this pandemic? What should they do?
So they have to follow a couple of rules. First rule is that income minus expenses is never savings. It is always income minus savings equal to expenses. You should not be living on credit card. You should be living out of credit card. Number two, there are only two rules of making money. Rule number one, never lose money. And rule number two, never forget rule number one. When you are investing, invest with a view to make money, not with a view to lose money. Learn from others' experience how not to lose money. Following a momentum stock, doing trading, running F&O positions, these are all surefire way of losing money. Going to buy a real estate which is under construction or which is never going to commence construction, supporting a developer whose credentials are not good enough, these are all surefire way of losing money. Long back, I had gone to Calcutta in Bada Bazar area to meet someone, elderly Marwari gentleman, royal, blue-blooded family. So when I went in, and this is about 25 years back, he asked me, Nilesh bhai, what kind of guarantee you provide on return? So I said, sir, I don't provide any guaranteed return. मैं तो पैसा लेता हूँ and I try to deliver best return. But of course, it is all subject to market risk. And he said, भागो यहाँ से. How come you are here? If I want to lend money at 3% per month, there are multiple people waiting outside my building to borrow. Why should I give money to someone like you? So I felt a little bit offended. He was an elderly gentleman, so I requested him, sir, एक बात पूछूं आपसे? He said, हाँ पूछो. So I said, sir, you must have started your career very early in life. मतलब गुजराती मारवाड़ी में तो बेटा पैदा होते ही पेड़ी पे बैठ जाता है. तो he said, हाँ मैं तो मतलब स्कूल के टाइम से ही पेड़ी पे आता हूँ. And I said, sir, you also belong to, rich family, गर्भ श्रीमंत है आप तो. He said, हाँ मतलब मेरे परदादा तो दोरी लोटा लेके आए थे कलकत्ता, but then they have done well and I was born with a silver spoon. So I said, sir, if my mathematics is correct, 3% per annum is roughly 36% per year. I'm not compounding per month into higher. At that rate, with the capital which you started, you should have started owning the entire world. But forget entire world. अब तो मतलब बड़ा बाजार में ये ऑफिस के सिवा पूरा बिल्डिंग भी ओन नहीं करते. So what are you, telling me that you are earning 36% compounded return? And it hit him. And he said, नहीं बेटा मैं तेरे से झूठ नहीं बोल रहा हूँ. So I said, 100% uncle, I'm sure you are not lying to me. There are people who will borrow at 3% per you, but they'll pay you interest. They won't pay you principal. They'll run away with your money.
Correct.
And what had happened was exactly that. This gentleman was in Sharafi financing. He was earning very good interest, but occasionally, regularly, every third or fourth year, he'll lose his principal. Effectively, his wealth remains stagnated rather than going up. So never make the mistake of return on principal. Focus on return of principal first. Safety is paramount, then return comes. If you follow this rule of never lose money and never forget that rule, you will be well off in investment world.
Super. My last question, Nilesh bhai, before I open it up, I've had a few questions here, which I'm going to ask. We've only got 4 minutes left. My last is, finally, when do you believe that the Indian economy is going to go back to that 7.5% GDP growth, Nilesh bhai?
It all depends upon what action we take. And in a very simple way, if $5 trillion GDP remains target of Mr. Modi, it will take time to achieve it. But if it becomes target of every single Indian, 138 crore Indians, then we will go to 7.5, 10% very early. The burden has to be shared by every Indian, not just by one person.
Beautiful. Absolutely. Absolutely. The burden has to be shared by every Indian, and it cannot be responsibility of one individual to be able to take that up. Is Nilesh, I'm going to ask you just two questions which have come up from the audience. One of them is saying is that will Mumbai residential real estate uh, yields come in line with the FD rates, i.e., both close to 5%? So the yields in Mumbai residential, would it come to 5% close to the FD rate?
So if you see the historical rates, undoubtedly rental yields are far higher than FD rates on the old properties. If you look at the market value, then undoubtedly it is far lower.
Yes.
But will we see the gap between historical value and market value narrowing, as in some cases market value comes down and hence rental yield improve, or in some cases rentals going up and hence rental yield improve? I think both will materialize. All I can say is that the gap between historical rental yield and market rental yield will narrow down significantly in the days to come.
I agree with you, Nilesh bhai. Very well summarized. Very quickly and very articulately summarized. The next one is a little bit of a rhetoric question, Nilesh bhai. Everybody wants to know, is it right time to invest in property?
See, whenever you have money, it is right time to invest in property. But what is needed is a time horizon. If you are, let's say, investing in suburbs of Sivri and that area, then you are taking a bet that one day there will be connectivity across harbor, and Mumbai of that part will be connected to Navi Mumbai on the other side or Alibag on the other side. Now, if you have that time horizon, this is time to invest there. If you are taking a call that Navi Mumbai International Airport will come into play, and we will take all those decisions that it can become as good as Delhi International Airport or Singapore International Airport, then this is time to buy properties on the way to international airport or little after international airport. So if when you have money and when you have time horizon, it is always the best time to buy property.
Brilliant. Absolutely. That is wonderful, Nilesh bhai. We could have gone on and on. We've just run out of time. It has been just phenomenal. I mean, I didn't even know, we're half an hour already into this, and not possible to really summarize, Nilesh bhai. There's so much of knowledge, so much of the thoughts that you have given, right from what needs to be done on the real estate sector to the various sectors that we see growth coming in. To the discipline that most of the corporates need to follow, whether it's on the leverage, whether it's on the cost, whether it's on the leadership, and clearly the thoughts that if you are going to be an investor, remember these two rules: never lose money. In case you forget rule number one, make sure that the rule number two is that remember rule number one: never lose money. That is absolutely brilliant. I'm hoping that with the vision that our honorable Prime Minister has of $5 trillion, and as you rightly said, it's not responsibility of one guy; it's responsibility of 130 billion people or 1.3 billion people to be to deliver that. I do hope that real estate is going to be a big contributor in delivering to that $5 trillion GDP for the Indian economy. Thank you, Nilesh bhai. It has been absolute honor to meet up with you. Thanks for your time, and look forward to staying in touch.
Definitely. All the best, Anuj.
Thank you, sir. Thank you. Bye.